Welcome to the FMLS Market Intel Report. I'm Leslie Appleton-Young, FMLS Chief Economist. I'm back with an update to the ongoing saga of where's the economy going, what will the Fed do next, and how will it impact rates and the housing market. In the 4 weeks since the Fed rate cut on September 17th, mortgage rates haven't moved much, but at 6.3%, they are 50 basis points below where they were in early June. These are the lowest mortgage rates all year, and we've been anxious to see if pending home sales would respond. The answer is a resounding yes. In the FMLS service area, we are seeing renewed momentum in contract signings, with pendings up 7.2% year over year for the week of September 28th. Nationally, NAR's pending home sale index rose 4.9% month to month in August and was 3.8% higher than a year ago. This suggests that buyer activity may be picking up again, translating into more closings in the upcoming months. The Fed meets again the last week of October, with decisions on further rate cuts heavily dependent on the balance between a strong labor market and low inflation. As of now, the federal government is shut down and data releases are on hold. So while the September jobs report from the Bureau of Labor Statistics didn't materialize, there are private sources of information that give a read on the labor market. ADP reported that September private sector employment fell by 32,000 jobs, with losses in both goods-producing and service-producing sectors. Challenger, Gray & Christmas reported 54,000 job cuts in September. And initial claims for state unemployment benefits, which spiked in early September, have dropped but remain elevated. While not equivalent to the data from the BLS, these reports paint a picture of a labor market that is continuing to weaken. What about inflation? The Fed's preferred inflation gauge, the Personal Consumption Expenditures Price Index, rose 2.7% year over year in August, up from 2.6%, while the core PCE held steady at 2.9%. These data reassured the markets that inflation is not blowing up and provide a green light for the Fed to proceed cautiously downward, especially given weakening signs in the labor market. How are consumers responding to all this uncertainty? Well, the short answer is not well. The University of Michigan's index of consumer expectations is down 30% year over year, from a reading of 74.1 last October to 51.2 today. Consumer sentiment has reached lows similar to the Great Recession in 2009 and COVID in 2022. The survey director noted, pocketbook issues like high prices and weakening job prospects remain at the forefront of consumer minds. At this time, consumers do not expect meaningful improvement in these factors. The New York Fed survey of consumer expectations found that Americans grew more worried about the future of the job market in September. They reported a cutback in future spending expectations amid mixed views on future earnings and income levels. They also see inflation pressure persisting, with price gains being higher a year from now. Noted one analyst, the New York Fed data tugs on both sides of the Fed's dual mandate, but shouldn't pull policymakers off track from lowering interest rates. After parsing the available data, there is widespread expectation that the Fed will initiate 2 additional rate cuts between now and the end of the year. According to the Fed Watch tool, the likelihood of a quarter-point rate cut on October 29th is 97.8%, and another cut again on December 10th is 95%. While the bond market has already priced these cuts into short-term instruments, long yields are anchored by inflation expectations, which remain elevated and keep the future path of mortgage rates uncertain, at least for now. For sellers, the current window of lower rates means an expanding buyer pool that requires a well-priced listing in pristine condition. For buyers, it means a little breathing room on affordability, coupled with ample inventory and a slower sales pace. In short, a market of opportunity that we haven't seen in a while, and one that shouldn't be missed. Take a look at market intel on the FMLS website to access the most current market statistics. They are updated weekly. If you're interested in resources relative to our market dynamics and want to dive deep into local markets, we've got you covered. For FMLS Market Intel, this is Leslie Appleton Young, and I'll see you next time.